Hello everyone, welcome to this video. Today we're going to be talking about TSM and I'm going to be walking you through my valuation model using DCF and multiples and Graham's valuation model, and then we're going to be go over a little bit about the fundamentals in TSMC and my overall thoughts about it. And if you're new here, my name is Venus. I've been working in tech in the past 8 years and I have an education background in MBA focused in finance. So I want to give you a perspective from a person who is working in tech and also having an education background in finance. So without further ado, let's jump right into it. So now I have the DCF model right in front of you. I will not go over the calculation in too much detail because I've done that for the NVIDIA one, which is here, and I have done the same thing for AMD. If you're curious, go out and check out my NVIDIA and AMD walkthrough video where I go over the calculation line by line. And here I just want to highlight a couple things from the DCF model. So the conclusion here is the implied share price is about $119 from my calculation. And that's based off the assumption of for the next year, and the growth rate for the revenue is going to be around 22.3%. That's roughly the analyst consensus, where I pull the data from Yahoo Finance, and feel free to pull the data from different sources. And so basically this is the number I'm using, 22.3%. And also for the next 5 years, I just made it 5% for the remainder of the year up until 2035. And for the years after 2035, I made it 3% for the terminal growth rate, which is pretty typical. So with this assumption, which I think is fairly a reasonable assumption, and assuming that TSMC can maintain its current gross margin and maintain its current operating margin and the same tax rate and similar to the depreciation and the change in net working cash flow. So those are the key assumptions I made, and there's also a WACC calculation. Basically, these are fairly straightforward calculation, and I have a link down below for the exact model if you want to grab a copy. So TLDR for this here is with a fair calculation, TMC's implied share price is around $120, and now TSMC is trading at $139. And given how much hype around the semiconductor sector recently and also the AI space, TSM I think is very, very reasonably priced at this point. And let's take a look at its multiples. So TSM's multiple is 26, roughly 27, right? If you look at other big tech company, and Apple is around the same multiples, and Google is slightly lower, and Microsoft and NVIDIA and everybody else is higher, a lot higher in terms of its multiples. So if I take an average of these big techs multiples, and TSMC's stock price will be over $200, and that will be a very aggressive assumption, I would say. And if you use Graham's valuation model and use a 20% growth rate, and that will also give you over $200 valuation. So a couple of key things here. Let's summarize. Number one, TSMC is a manufacturing company at the end of the day. It has a very aggressive gross margin. As a manufacturing company, maintain a gross margin at 55%. And operating margin at 40%, which is super impressive. So Warren Buffett, if you don't know, he said TSMC is the only company out there making advanced chips, and there is no other competition like TSMC. But he sold his TSMC stock. So this is a wonderful company at a fair price, but he doesn't like the instability because TSMC's location is in Taiwan because it's Taiwan Semiconductor, right? And there's a lot of tension going on between Taiwan and China, and that raised a lot of questions. So he eventually decided to sell all his TSMC stocks, which kind of unfortunate. So that's definitely some of the risks of investing in TSMC because of the geopolitical tension there. But if you think a little bit deeper than that, right? who are TSMC's customers and what's going to happen when something happened to TSMC, what's going to happen to the entire world, the entire chips basically. So TSMC's top 10 customers account for its large portion of its revenue. Its biggest customer is Apple, and the second biggest customer right now, I believe, is NVIDIA. And AMD and everybody else was taking the remainder of the share of the percentage, right? So if anything would happen to TSMC, that will mean Apple, NVIDIA, and everybody else will be in a very difficult position as well. And the entire world will be in a huge shortage in terms of chips. And imagine what that will do to stocks like the multiple companies we just looked at, and they are basically all using TSMC's chips, right? So I think investing in TSMC, the risk is there, but also if you invest in Apple and all the other companies, the risk is also there because they're all dependent on TSMC. So to mitigate some of that risk, and TSMC started building a factory in Arizona, and is expected to start manufacturing by the end of 2024. That was our original target. Now it's moving to 2025. That's definitely a right direction forward, but it's going to take a lot of time for a company to build out large manufacturing and being able to supply a good portion of it, because right now the Arizona factory is only going to be a very small percentage of its total manufacturing capacity. Then the question comes to be, is TSMC expensive at this price point? And let's take a quick look at its stock history. So I put the stock price here. So since 2019, and there its revenue doubled, and its stock price right now is trading about 4x of its original price. So it's definitely, if you think about the revenue multiples, right? The revenue doubled, but the stock price is 4 times of its original price. So from that sense, it's probably slightly overvalued, and from our calculation as well, that's what it implies. And if you see the history, and whenever there is a decline in terms of the chip demand, and the stock price pull back like crazy, and the last pullback was like 47%. And when it bounced back, and the stock bounced back very strongly as well. So at this point of time, here are the key takeaway for myself. Number one, TSMC is a great company. I will continue to monitor it. I will continue to do a lot of research to understand its business and its risks. However, it does carry a lot of risks in terms of its geopolitical risk. But if TSMC's stock price ever going to be pulling back because of the decline of semiconductor demand, I think that will be a great opportunity to get in, because semiconductor sector has this tendency of going ups and downs because of the demand changes. But overall, in the long term, if you look at the history, even if it pulls back in terms of its revenue, but it always bounces back. So you can look at the historic pattern, right? There is pretty big upward trend, and then pull back, and then strong bounce back, and then it keep going up, and then flattening out for a few years, and then strong bounce back. So that has been the pattern of the semiconductor sector in general. And if you look through NVIDIA and AMD, and they also follow a similar pattern like this. So that's where I would wait very patiently. Like Warren Buffett said, that you want to buy a good company at a fair price. You don't want to buy a fair company at a good price, but also in the same thing, at a fair price is very important. So for me right now, the fair price for TSMC is going to be around $120, which is not too far from its current trading price. So give it a little bit time, and making sure that you do your own research and fully understand the risks involved with this stock, because it is a stock that's now based in the United States, and it's heavily relying on manufacturing and supply chain that's located in the region where it has a lot of geopolitical tension. So thank you so much for watching until this point. If you're curious to checking out how I come up with this model, make sure to click on this NVIDIA video that I did a full walkthrough. And there is a link down below for a copy of this version. And feel free to check it out and subscribe. And I hope to see you next time. Bye.